Hello, everybody. Welcome to the first ever weekly market analysis that I'm going to make on this channel. This is going to be for the week of January 1st, 2024. I don't know, sounds pretty dope. But yeah, so let's check the weekly chart. Alright, so we're on the weekly chart. Looking at the biggest picture. Alright, to make it clear, for this next week of January 1st, I am leaning towards a red weekly candle. Yes, I'm hoping for a red weekly candle. Now, you might be wondering, why would I say that? So I'll show you two reasons. Now, first reason actually is the most simple. If you just look at this push, right, it's gonna be hard to say that we're just gonna keep pushing this hard, right? We've had this huge expansion after we consolidated for a bit here, right? So in the beginning, in the fundamentals of ICT trading, right, what do you look for during an expansion? Now, don't get me wrong, I'm bullish for, like, overall. Like, if you were to say monthly chart, then yeah, I'm bullish, right? And look at this, we're making all-time highs like every week. But as of the next weekly candle specifically, I believe we will end somewhere in this weekly fair value gap, right? And depending on how we react once we get here, then we'll know if we want to go even farther and maybe fill another imbalance, or, you know. But that's going to be on the lower time frames. But yeah, so these candles look like they're getting weaker and weaker, more tails, less bodies. And also, if you pull out your fib, you drag it from this last little swing downwards, right? We have wicked twice off of this 1.5 level, right? This is a key level. Right, I do think we could hit the 2 level, but not without some sort of pullback first. And so that's why I'm hoping we get to this fair value gap at least for a push back up. Now, let's move it down. Daily. Got a daily chart. So on the daily specifically, what I've seen, and most of you have probably seen already, just from me zooming in. And I was looking at this a week ago, but after we had this huge red day, right, that created a good bit of liquidity at this level. And then you could say on this day as well, we came up and we came back down. And some people probably went, especially retail traders, right? Retail traders would draw like something like this out. They would draw something like this out and be like, oh, this is definitely like a supply zone, right? If we come back up here, I'm shorting for sure. And so the market makers bring it back up here and they drop it to make them think, oh yeah, we're rejecting, that's great. Double top. This is the top. You know what I'm saying? But really, what they had in mind was grabbing the liquidity from all of the buy stops up here. And going into this past week, I knew that, I saw that beforehand. So this is playing out pretty well to what I had planned for. So yeah. Now, going to the 4-hour chart. Let's see. This is where I have a sort of trade entry planned out a little bit. So early this week, probably on like the first day of this upcoming week, my ideal entry for a short, and I remember this next week is a bearish bias for the weekly buys, so I'm looking for shorts mostly. But yeah, we grabbed this liquidity. Remember, this is what I just showed you. Grab this liquidity, and we started coming down. We didn't break this swing low, so this is the swing low that we're trying to break. And we just broke it on this last 4-hour push. Right. So, what do? When you break the swing low after grabbing liquidity, look for a retracement into the fair value gap, right? And just an extra bit of confluence for this fair value gap. It's also a high quality rejection area, like a market pivot almost, you could say. Right, we rejected from it right here, also right here on this candle. Rejected from it right here, which pushed us higher. And you could say we rejected right here as well. So this, I mean, if we come up into here early on, like I'm ready to short. I might even just short right when we get there, So, and then looking at it a little bit more, I don't think we'll get up to here, but we do have an order block right here. So if we end up going past this fair value gap, and let me just mark this in as well. Yeah, so we have a fair value gap right here, an inverse fair value gap right here, which we actually probably could have used for this trade. That would have been crazy. But yeah, I mean, this is the trading journey. This is not, I'm not saying I'm a professional trader as well. None of this is financial advice. This is just all my opinions on the market. But we do have this order block up here. If we want to come all the way up here, this would be my other shorting area. But that's about all the analysis on the 4-hour. Now let's take it a little bit deeper. I'm going to delete this and this just to keep it clean. Let's go to the 1-hour. Alright, boom. So you can see the same stuff, You can see the same stuff. This is going to be a liquidity area for us, right? If we come up here early on, I would go on like the 15-minute and try and see if I could catch a trade off of this area. And my targets, well, my main target would be right under this area because that's where the liquidity for sell stops is going to be. And then the next area is going to be right here, so on and so forth, right, until you get to this fair value gap. So obviously that's just normal stuff. But ideally, that's going to be the main trade for this next week. This would be a heavier trade probably, but I'm still learning. It's going to be paper next week, I can guarantee that. I do have some money saved up for when I'm doing better with logging my trades and analyzing and stuff, and just actually making less trades with more quality, which is what my goal is, right? I want to catch a piece of the pie, I'm not trying to eat the whole pie like a fat ass. Just give me a piece and I'm good. So we have that. I didn't really look into the 15-minute before I started recording, but I suppose we could. Same thing here. You could have even played this fair value gap on the 15-minute today, at the end of the day maybe, to break this liquidity. Let's see. Put it to the 5-minute and see if there was an entry. Okay. No entries. Check the 1-minute for any entries. There probably was on the 1-minute. So we came into here. So this was the first time that we came in. And we made this downtrend, or this little down move. Since this is a 15-minute fair value gap, I probably wouldn't trade an actual trade for this on the 1. I would probably do like the 3 maybe. Let's just see if that's any cleaner. Alright, but you can see here, right, the first time we came in and we went down, the market structure shift would have been right here, but we didn't really have any prominent candle closes under there, right? And then we continue to push back up, so that would have been a failed market structure shift. Right, and then we have this up move back into it, and then we broke this little spot for liquidity. We came back up, and we hit this. What is this? This is an order block that was created. So your entry could have been like right here. Stop loss above the high. You could target right under here. And also, you could do is draw the fib from this recent swing, and look what's here, the 0.5, right? So I like to use the fib for take profits as well, just to clarify, but that could have been a trade today, right? I was not looking for that today, so I wouldn't have traded it. There was one good trade today as well. Today's Friday, so I'm doing this kind of like right away, but where was it? So yeah, okay, here's the trade. It was it was on the 5-minute. We have this order block right here, formed at 6:45. We came back up to it after the open, right here. And this trade would have been money. But yeah. if you want to take the fib, right, so your first TP could have been under this liquidity right here, which we smashed that. And then your next TP could have been at the 0.5 or the -1, or maybe even the -2. And I don't even have the -2 up here. We can put that though. So what we have 0.51, 1.52. Okay, yeah. So yeah, you can see this is the 2 right here. Like, depending on how big of a move you would expect, you can fiddle with that, but you know. Sorry for the squeaking. But yeah. Anyways, enough yapping about today. But just to recap everything, I'm expecting a bearish weekly candle. My analysis is that this was a liquidity grab, and I think we'll end somewhere in this fair value gap. On the 4-hour, we have this fair value gap that I'm looking for an entry off of. The entry would be on the 15-minute most likely. You know, we come up here maybe, form like a, come up here, we reject, form a fair value gap, trade back up into it, or we create an order block of some sort, and then we trade back up into one of those, and then we just dump, and then the TPs would be here and here. Alright, those would be my normal TPs. So, yeah. And just so you know, like, I'm bearish until we get to 16,750, right? And just on a side note, I mainly trade NASDAQ just because it's like, I don't know, the fastest of like NQES, Dow. Sometimes I trade gold or crude oil futures, but not very often. But yeah, I'm bearish until we get into this fair value gap, and then, you know, I'll just wait to see how we react. But that is the first weekly analysis of documenting my trading journey. And yeah, there's nothing else to say, so I'll see you guys in the next video, which will be my first actual trading video, where we'll see how I trade and analyze afterwards. So thank you guys for watching. Hope you enjoyed, and I'll see you in the next one. Peace.